Hello and welcome to the webinar, Leveraging Speed and Resiliency to Minimize the Impact of Market Turbulence on the Supply Chain. Part of TAKE's webinar series, Optimizing Supply Chains in a Global and Mobile Economy. My name is Donna Fritz and I'm the VP of Marketing and Product Management for TAKE Supply Chain. Joining us on the presentation today are IDC Manufacturing Insights Practice Director Simon Ellis and TAKE Supply Chain Account Executive Josh Noble. Before we get started, I'd like to take a few moments to cover some housekeeping items, which you can see on the screen. All of the attendees will be on mute. You can submit any questions through the Q&A panel on the right bar of your screen, or you can email questions to contact@takesolutions.com. If you have any technical difficulties during the presentation, you can contact WebEx customer support at 1-866-229-3239. Select option 1. This session will be recorded and an on-demand version will be made available by next week. For more information, please chat with the host. Before getting started, I'd like to take a moment to introduce our speaker, Simon Ellis. Simon is the practice lead for IDC Manufacturing Insights. He has more than 27 years of experience in supply chain, most recently with Unilever. His industry experience includes high-tech research, logistics, planning, and supply chain network design and procurement. And he specializes in advising clients on affordable solutions for sourcing, tracking, data synchronization, and manufacturing techniques. Thank you for joining this broadcast, which will last approximately 45 minutes. Today, Simon will be discussing supply chain trends and priorities for 2014 and the role that speed and resiliency can play in managing market turbulence. At the conclusion, Josh will provide a brief overview of how TAKE's collaboration solution, 1SCM, can begin delivering increased speed and resiliency to supply chain operations in a relatively short time. And with that, I will turn the presentation over to Simon. Welcome, Simon.
Thank you, Donna. It's a pleasure to be here, and good morning, good afternoon, good evening to folks wherever you may be in the world when you're listening to this webcast. So what I'm going to do today, as Donna intimated, is talk a little bit about what we see for supply chains in 2014 through the lens of speed and resiliency. And I'm going to, in terms of the agenda, I'm going to cover 4 topics. I'm going to talk a little bit about background. It's always good to set the context to kind of provide basis for the conversation, for the ideas. I'm going to talk a little bit about supply chains in 2014, some of the things that kind of broadly we see for supply chains. I'm then going to spend probably the bulk of the time talking about a handful of kind of key trends, key predictions that we see, for 2014 and frankly and on, beyond that, since many things in the supply chain are sort of, multi-year engagements, multi-year endeavors, and then kind of close with just a few sort of concluding thoughts, just sort of a few kind of general observations. So in terms of background. And here on the slide, I sort of refer to this as kind of the business challenge. And there's lots of challenges in the supply chain. It may be a bit sort of presumptuous to suggest this is the biggest one, but it certainly is the thing that I hear a lot from manufacturers. This kind of notion of sort of the two sides of the supply chain, supply complexity on the left and sort of global extended supply chains, long lead times, kind of demand volatility on the right, the desire, certainly in terms of those manufacturers who sort of exist in kind of consumer-facing, customer-facing businesses, higher levels of demand volatility, less brand loyalty, and so you kind of have these sort of two sides of the supply chain sort of banging up against each other, and how manufacturers manage within their supply chains, how they manage sort of between these two, I think is one of the big challenges facing them, and whether it's about balancing forecasting and responsiveness, right? This sort of notion of agility, whether it's about sort of trying to reduce the complexity and the complications in the supply chain in the market, whether it's about doing a better job of managing inventory. You know, I use the word agile a lot, but you know, this notion of sort of agile inventory, and you know, risk management and resiliency, and you know, how they apply technology, whether it's, you know, cloud, big data, analytics, mobility, social business, the things that at IDC we call the third platform, which I'll get to in a few slides, but you know, how they kind of apply technology to this problem. And you know, and it's not just about moving the moving of products, right? It's also the moving of information. And while products tend to move sort of in a single direction down through the supply chain, you know, information moves. You know, moves in both directions, frankly, and so we see this as kind of the sort of the crux of the challenge for many of these supply chains. On the next slide, this is something that this is a slide that we've used now for a couple of years in our in IDC's predictions webcasts, and it's sort of this notion of the productivity imperative. And I've got a couple of builds here. The first build talks a little bit about sort of this notion of platform 1 in IT, which was kind of mainframe to client server. Build number 2, you know, talks about what we referred to back in the day as platform number 2, which was this sort of notion of client server to internet. But I think for me, certainly as a manufacturing guy, as a supply chain person, you know, it's this sort of sea change that we saw. You know, we can debate the exact time, but nominally around sort of 1980, where all of a sudden, you know, businesses were continuing to drive higher productivity levels, but we weren't necessarily seeing average hourly compensation climbing at the same rate. We weren't necessarily seeing average hourly wage rates. That's hard to say, climbing at the same rate. So we have this sort of pressure, this challenge to manufacturers, and you know, I hear this all the time. You know, I want to double sales, I want to double productivity, whilst maintaining my, you know, number of employees, or while maintaining my cost structure. So we see this sort of drive for productivity without necessarily the sort of the accompanying costs that we saw certainly prior to 1980. And you know, platform 1 to platform 2, we're now really moving into what we call platform 3. So on the next slide, we talk about this notion of the third platform, things like cloud computing, mobility, big data, social business, the things that I had mentioned on the first slide. You know, how they support business growth, how they support you know, emerging markets for many. You know, for many manufacturers, you know, emerging markets, in some cases they're sort of emerged, but you know, that's where they see the growth. And so, you know, when we start to think about sort of third platform technologies and, you know, this kind of obligation for productivity, we see some interesting business process transformations, right? We see some examples about how manufacturers, and it's the, you know, the sort of the 5 bullets here on the slide, how manufacturers engage with customers, you know, the speed at which they deliver their products and services. I mean, for me as a supply chain person, speed is critical because, you know, customers, consumers are certainly not more patient. They're less patient. They want things now. You know, sort of, it's the in some ways it's sort of the Amazon factor, right? It's next day, or it's 2 days max. And so the sort of speed at which manufacturers are expected to deliver products and services continues to put pressure on supply chains and the agility of supply chains. How manufacturers innovate, you know, whether they sort of, you know, I worked, Donna mentioned I worked for Unilever for many years, and you know, companies like Unilever or Procter & Gamble have changed how they innovate. It's a much more open, it's a much more collaborative process, and that is right in the wheelhouse of many of these third platform technologies. You know, this notion of resiliency and reliability. You know, how do we how do we respond quickly to changes in our environment, whether internal or external? Are we able to respond quickly, or will a natural disaster somewhere in the world actually bring our operations down for 2 months? Those kinds of things. So I think we see sort of these 5 things certainly being driven by these third platform technologies, and I think the last point of this slide is an important one, because not that the business hasn't always been involved in sort of understanding how technology impacts sort of their particular function, whether it's finance or supply chain or marketing or sales, but I do think that we are increasingly seeing, as we say here, the line of business taking a front seat in these technology initiatives, and being sort of a true partner to IT, or in many cases maybe leading the initiative. And some of my colleagues have made the observation that within 5 years, perhaps the chief marketing officer will actually have a bigger technology budget than the chief information officer will. So it's this sort of interesting sort of evolution to sort of a real partnership, I think, in manufacturing between IT and the line of business. And so, as we move on and we think a little bit on the next slide about kind of general business performance, there's no end to metrics. There's no end to measures that you can look at, and there's a couple that I like, certainly as we think about the manufacturing industry. The Purchasing Managers Index, which I think is a good proxy for manufacturing growth, and then consumer confidence, which of course ultimately manufacturers make things that people use, and so the degree to which consumers are optimistic about their financial outlook, they're optimistic about the economy, I think tends to drive in the long run tends to drive business performance for the manufacturer. And so we've seen consumer confidence climbing nicely over the last 6 or 7 quarters. It does bounce around a little bit. We had seen PMI do fairly well. I think there was last month there was a blip where the PMI didn't do quite as well as people had expected, and it had a short-term impact on the stock market, but that seems to have been largely recovered from. And so certainly PMI continues to be on the expanding side of the divide rather than contracting. So I think we're certainly optimistic about the future. Exports have been a little sluggish in recent quarters, but I think again, sort of the improvements in consumer confidence are offsetting that. On the bottom of the slide, on the right, just talk a little bit about kind of margin and revenue. It's certainly worth looking at sort of overall tracks of revenues and profits, and revenues are now pretty much back to where they were before the Great Recession. Margins, certainly there continues to be margin pressure, and there continues to be margin volatility, but I think at the end of the day, we're seeing finally, for many manufacturers, sort of a restoration of growth in some of their luxury lines, rather than sort of this heavy focus on value that we saw certainly out of the Great Recession. So, overall, I think a pretty good picture. On the next slide, just sort of a quick, just a few numbers, and I'm not gonna go into this in great detail, other than to sort of suggest that in translating sort of these trends into IT spend, we see a pretty good projection for 2014. Expect growth in the sort of 4.5 to 5.5 range, depending upon the category. Asset-oriented value chains are those value chains where they're sort of invested heavily in assets and property, plant, and equipment, so chemicals and pulp and paper and metals. Slightly lower growth, but still certainly on the positive side of the ledger, and still quite healthy. Brand-oriented, the consumer products industries, we expect to spend quite aggressively in 2014. Engineering-oriented, automotive, aerospace, and defense kinds of companies a little bit lower, but again, still certainly positive spending. and then the technology companies, sort of the high-tech folks, second only to the consumer goods, the brands folks, in terms of where we think spending growth will be in 2014. Just sort of some numbers regionally, some good growth in the U.S. and certainly in other regions, Asia Pac and Western Europe a little bit lower, but I think overall we see nice healthy IT spend for 2014. So moving into the next section, just want to talk a little bit sort of generally about supply chains in 2014. On the next slide, some implications. These are things that I've been using for a while now because they continue to be true, right? I mean, so when you think about the supply chain, last year, this year, next year, and on further, complexity, extended global supply networks are still a reality for most manufacturers. I mean, most manufacturers are increasingly global, certainly on the supply side. I mentioned that in my first slide, the sort of the business challenge slide about volatile demand and the fact that consumers are less brand loyal, more selective. So I think that continues to be a factor that drives supply chains and forces supply chains, frankly, to be more agile and faster and more responsive. The accelerating pace of business, whether it's orderly times, whether it's retailers getting stock out to retail more quickly. Things are not going slower; they're going faster. And as consumers are more agile in their consumption of information, and manufacturers need to be more agile in terms of the ability to meet those consumers' increasingly difficult and tough expectations. And then I think, whilst we've not been in a high inflation environment for a while, direct input costs continue to be of concern to manufacturers. I talked in a slide before about sort of margin pressure. Probably on this slide, it's more about margin pressure necessarily than margin declines, but we do see manufacturers having a hard time sometimes getting price increases to stick, and so the ability to manage input costs really is critical, whether it's about sort of sourcing globally or using kind of vendor-managed inventory techniques. Certainly, managing direct input costs is something that manufacturers continue to keep an eye on, and so procurement and supply management functions within the supply chain are extremely important, as they've always been. So on the next slide, the predictions that we do, the trends that we identify for supply chains are not done in a vacuum, and they're not done with each year completely separate from the prior year or from the subsequent year. I try to sort of tell a story, and certainly in the last 3 years, 2012, 13, and 14, it's kind of been this sort of build up to this notion of kind of operational resiliency. 2012, we talked a lot about speed and responsiveness across the demand and supply sides of the supply chain. Last year, we talked a lot about supply chain resiliency with kind of responsiveness as a first principle, and supply chain resiliency from the perspective of this kind of strategic obligation, this kind of strategic goal. I think for 2014, we expect to see certainly a continuation of this focus on supply chain resiliency, but a more operationalization of that. How do once companies have sort of decided strategically that supply chain resiliency is important, what does it mean? What do they do? What's the sort of the operational implications for it? Is it visibility? Is it extra factory capacity? Is it sort of broadening suppliers, make more flexible supply network? What are the things that the companies are going to do? And time will tell, right? I mean, we'll see that play out. So we believe in 2014 and beyond. But I think that is where we see the focus for supply chains in terms of their supply chain strategies in the coming year. And and frankly beyond. So on the next slide, we've talked quite a bit about this notion of the 3 Ds of the value chain, the 3 Ds of the supply chain. Sort of this notion of kind of demand-oriented, data-driven, and then digitally executed. And this is and the sort of the S curve and the sort of the sort of the notions, the ideas on the S curve are those things that sort of we've been tracking for a while, whether it's about sort of segmented supply chains, right, doing different things for different categories, whether it's being more heavily integrated in terms of the overall planning efforts, or frankly the overall execution efforts, whether it's about resilient supply chain or collaborative commerce networks. It's all about sort of taking this kind of demand orientation, making sure that what you're doing is data driven and that you're driving activities in the supply chain based on information both from the external market and from your internal business. And then, this sort of notion of kind of digital execution, using technology to capture and disseminate information, moving away from kind of paper-based processes, doing it sort of more from a kind of digital perspective. And that's kind of this sort of journey we expect to see over the course of the next 5 years, as we move to sort of this notion of the 3 Ds of the value chain. So on the next in the next section, I want to talk in a bit more detail about a few key trends that we see in the marketplace. And I think the next slide, the first one, is this notion of operational resiliency. It's really, for me, kind of at the center of the sort of the trends. This notion of external forces, internal practices, kind of sort of conspiring to create this kind of almost perfect storm around supply chain risk. I've talked a lot about this notion of extreme granularity, all of the data that's available to businesses, and so and both upstream and downstream. And so, how do manufacturers start to think about all of that data? I think it's about developing this sort of demand orientation through things like demand sensing and capture. I think it's about, and I'm not going to cover all of these individual points here, but I think it's also about sort of supply and operational visibility. I always think back to the classic comment about you can't improve what you don't measure. And I'm not sure there isn't sort of an adjacent wisdom about visibility that you can't react to what you can't see, right? So I think this notion of sort of supply operational visibility and leveraging data to broaden and extend supply chain intelligence. How it's the I know what I know what I don't know, but I don't know what I don't know. How do I start to broaden kind of where I see things and how I can anticipate, so that I get this sort of I get this more resilient supply chain, this ability to sort of respond more quickly and more effectively to kind of changes in the marketplace. And I think on the next slide there's there's sort of 3 key enablers. I've used the term extreme granularity a lot in the research that I've published over the last year or two. Again, this notion of all the data. I mean, certainly the notion of big data is well established. I think it's the operational ability of the supply chain to sift through it all, right? Convert that data into an actionable, timely response that's critical, and that's ultimately where the value lies. Lots of manufacturers have told us that they don't fully leverage data that they know within the business, let alone that with that which kind of exists outside the business. So I think as we think about operational resiliency, that ability really depends a lot on tapping into all of these potential sources of insight in terms of data. So this sort of extreme granularity and the ability to manage that data really is one of the key enablers of operational resiliency. accurate speed. It's a bit of an awkward term, I suppose. And what I've tried to do is try to sort of capture this notion that it's not enough for manufacturers just to be fast. They've got to be fast and accurate, right? I mean, they've got to deliver the right set of products and services, but they just have to do it more quickly. And I think certainly the lack of resiliency, the lack of responsiveness, it has hampered businesses, but in their ability to anticipate problems and react quickly to mitigate these problems. So this sort of notion of speed, but speed done accurately, speed done effectively, is an important enabler of sort of this notion of operational visibility, operational resiliency. And then lastly, operational visibility. And I guess I'll say again, if you can't see it, you can't react to it. I mean, disruptions are easier to manage if you have some advance warning, right? I mean, that doesn't mean that you're going to have advance warning to everything. And sometimes, mitigation is not possible, and what you need is the ability to read quickly and react quickly. We've seen many times where there have been natural disasters in the world, and those companies that have been able to move the most quickly have taken advantage of limited alternatives, and those who have moved more slowly have found themselves kind of out in the cold. So this notion of kind of operational visibility, I think, is really critical in terms of being the third enabler for this notion of operational resiliency. On the next slide, this is moving from moving from operational resiliency, talking a little bit about sort of, and I suppose I tend to use risk and resiliency interchangeably, but I think what we see most pointedly for manufacturers is understanding how to monitor better, how to get better visibility, right? And so, the comment here on the slide, the opportunity to blithely ignore supply chain risk is over. Do so at your peril. I think it's the consequence of globalization. It's the consequence of increases in speed. It's sort of the as things get more complex, as they go faster, the opportunity for something to go really wrong increases. And it's not just the big event. I mean, everybody, I think, tends to, when you talk about risk management, you talk about supply chain resiliency, I think everybody tends to go immediately to the sort of the tsunami or the earthquake or the flood or the hurricane or the tornado. And certainly it is those things, but it's also the hundreds of little things that occur every day that can significantly impact the health of your supply chain. The fact that we thought a customer was going to order X, and they ordered 3X, and so how do we respond to that? How do we operationally, what's our operational resiliency to that? How do we meet the customer's requirements whilst not sort of failing to ship to everybody else? But the devil's in the details, right? It's about what do I see? How quickly do I see it? How much lead time did I get ahead? What level of flexibility do I have in the supply chain? And on all of those things are important, but it starts with this sort of notion of supply chain monitoring and visibility. And I think with particular focus on recognizing where there are vulnerabilities, both externally and internally, right? I mean, lean principles, while they have been massively beneficial for supply chain organizations, we've certainly worked with some manufacturers who have gotten themselves to the point where they're so lean, they're brittle, they have no flexibility at all. And so, understanding where vulnerabilities may exist, and then beginning a readiness assessment, we think is something that manufacturers, if they're not doing already, ought to start doing, because I think it's something that's going to be increasingly important in this kind of faster, more complex supply chain world. On the next slide is sort of the if the first two slides were kind of sort of the line of business perspective, this is the more the sort of the IT technology investments involves modernizing existing systems, whilst also trying new approaches. I think that functionality continues to be important, but it's also about integrated. It's also about integration. It's also about implementation, and it's about sort of this notion of faster, more integrated planning. And I think both in terms of better linkages to demand signals and also deeper scenario planning, the ability to tie all of these kind of planning elements together. I think it's about broader adoption of cloud-based tools, not just for the kind of edge applications that we've seen, but also some of the key orchestrating capabilities like S&OP, sales and operations planning, supply chain risk and resiliency investments, particularly in supply chain monitoring and visibility, as I noted on the prior slide. And then we're also hearing a little bit about the sort of renewed interest in this kind of data management organization, where the business has clear governance rules around data, and each piece of data has a clear owner within the business, and that owner is responsible for data quality. Because one of the things I've certainly been worried about for some years now is as more and more data comes at the manufacturer, data quality becomes even more of a problem, and the old adage of garbage in, garbage out. A bad decision will almost always result from bad data. So I think it's interesting that we're seeing this sort of notion of the data management organization pop up a little bit again, and it'll be interesting to see as we move through 2014 and into 2015, whether we continue to see that. And then the degree to which we're seeing a more integrated approach to supply chain planning. I think we see that with its counterpart on the supply chain execution side, more integrated supply chain execution, particularly as many manufacturers start to think about service adjacencies to their product lines. Whether it's high-tech manufacturers selling hardware but making their money on software, or whether it's heavy equipment manufacturers sort of viewing more about that their assets are about selling, that it's selling earth-moving capability rather than selling earth movers, or it's selling combine harvesting capability rather than selling combine harvesters. So this notion of sort of a more integrated execution and the delivery of what we call product wrap services, I think, is another of the things that IT will have to start to support the business on. So on the next slide, I think I touched on this before, but the need to be faster really does require manufacturers to explore more deeply integrated supply chain planning and fulfillment functions. We saw in late 2012, moving into 2013, this sort of growing notion of integrated planning, moving from really a bunch of different individual planning components into a more cohesive effort that really ties all elements together in a seamless fashion and allows companies to be faster, to be more agile, to react more quickly to changes in the marketplace. And we see, as I said before, we see this notion really moving into sort of execution, into integrated fulfillment in 2014 as well. On the next slide, which I've called it sort of extracting data-driven value. But I think it kind of goes back to the point that I touched on a few minutes ago about this sort of notion of I know what I know, I know what I don't know, I don't know what I don't know, and how do we sort of expand the sphere of supply chain intelligence to include more of these things rather than less. I've talked to manufacturers many times about the fact that whether it was a product recall or a product quality problem, more often than not, data exists somewhere to facilitate just about any decision, right? You just have to find it. Companies who do recalls, more often than not, they say to me, you know what, somebody somewhere in the business knew that there was a problem. They just didn't hide it. That information wasn't wasn't in front of the right person at the right time to make sort of the fast decision in the right way. And so, so we had a recall. But if we'd known, that if we'd had that piece of data at the right place, we could have actually been proactive rather than reactive. And so it's not just about what a business knows versus what it doesn't know. It's also about making information available to the decision maker, when and how they need it. And so that's certainly something that we expect to see in 2014 and on, this sort of notion of kind of event-driven analytics as a way to sort of manage potential events in the supply chain and sort of have visibility into something that might have gone unrecognized or unknown previously, and then kind of cloud-enabled services, as support, either for installed applications or existing business processes, leveraging things like mobile and cloud for, it's a bit of a hackneyed phrase, I suppose, but access anywhere, anytime, and so this broader notion of extracting data-driven value and expanding the sphere of knowledge, I think, is something that we see many manufacturers looking to try to achieve, beginning to try to achieve it in 2014. So as I conclude here, I just, in the next slide, one of the things that we try to do with all of these predictions, all of these trends, is put sort of some planning assumptions around them, and there's sort of four ideas here. One is, and I've mentioned it a number of times now, so shouldn't be a surprise. Is again this notion of end user supply chains, manufacturing supply chains, embracing flexibility and visibility. If they're gonna adapt in the global marketplace that's volatile, personalized, and demanding quality. 2014, we expect we'll see technology groups, IT, increasingly focused on line of business technology. I think service is great and really important, but ultimately, investments in supply chain, have to deliver against the productivity goals. Whether it's waste elimination or, as I mentioned before, the ability to double the business, without necessarily adding any net new management personnel, any net new labor costs. And then facilitate product reliability, superior service performance, while maintaining cost competitiveness. It doesn't do you any good to have cost uncompetitive products, but at the same time, you've got to be meeting and exceeding customer expectations. And so the service cost dance that supply chains manufacturers have been doing forever continues to be even more intense if possible as we move forward. And then my last slide is just a couple of points around sort of guidance, central guidance for manufacturers based on these trends. Again, deliver productivity. Cost remains a top priority. Growth without adding infrastructure and headcount costs. Understand what establishing operational resiliency means for your business, and that's both known and unknown disruptions. Upstream and downstream visibility. You can't anticipate or quickly react to what you don't see. Integration over functionality is a bit provocative, I suppose. They're both important, and at the end of the day, you have to have certain levels of functionality in your systems. But world-class capability that's not used isn't helpful, and so make sure that as you import new capabilities, as you bring in new systems capabilities, that they integrate into the existing systems, that they speak properly to what you have already, because otherwise you get low usage and dissatisfaction for the new technology. And then service performance. I've done lots and lots of supply chain surveys over the years, and cost is almost always the top priority for most manufacturers. But in the last year or two, we've seen sort of service performance ascend to the point where it's kind of 1 and 1A, right? And this notion of customer centricity. And so I don't think that I mean, not that manufacturers could ever get away with horrible service, but I think you know, as we move forward, you know, as we sort of move in a world where the sort of the consumer certainly is more informed than ever, service has become more important than ever. And so, you know, maintaining the sort of the perspective on customer centricity, I think, is critical as manufacturers move through 2014 and into 2015. So that sort of concludes my my remarks for today. So now let me turn it back to Donna, or is it back to Josh?
Okay, I can probably take. I appreciate it, Simon. Might be able to elaborate kind of on the solution side where Take Supply Chain gets involved. So where does Take Supply Chain and 1SCM fit into supply networks and the accelerated pace of business moving forward, like Simon was talking about? The 1SCM Supply Chain Collaboration Suite provides actionable granularity between trading partners and what Simon identified as flexible third-party or third platform tools that can easily change with the pace of your business. 1SCM essentially helps you solidify the brittleness within your supply chain. So let's look at a couple examples related to Simon's topic of operational resiliency. To start, let's picture 1SCM in its portal form. It could be in the cloud, on-premise, or hybrid scenarios. They all function the same. Instead of a complete system overhaul, 1SCM modules are more like building blocks. So I'm going to change this around. I think this is a bit easier way to visualize 1SCM. If you need to eliminate tedious tasks around PO management, then you just add the PO collaboration module. Let's say later on you want to improve shipping collaboration, analytics, AP management, demand management, you name it. You just plug in the building block that fits your need. So in a straightforward example, let's say that you need to issue a PO for the purchase of raw materials. 1SCM can grab the PO from your ERP, whether it's SAP, Oracle, JD Edwards, etc. 1SCM will then share the PO with any strategic vendors you choose and issue real-time alerts to PO acknowledgments or reroute PO change requests. This gives you time to spend more on value-add activities instead of just burning hours chasing order updates. As you move forward, you can collaborate by sharing forecasts, keeping up to date with advanced shipping notices, and even supply vendors with your preferred label format. Now, let's take it a step farther. Let's say that something happens at vendor A. Maybe there's a broken machine, labor strike, etc. Even a short-term absence of the component you source from vendor A could cause a big hurt within your production lines or customer loyalty. Although vendors can directly notify you of issues via 1SCM's integrated chat, automated checks against the PO change or abnormal shipping dates can automatically alert you to problems. On acknowledgement, 1SCM allows you to quickly reroute supply chain activities to vendor B through simple changes in your workflow. When everything stabilizes with vendor A, you can simply revert back to your standard routing, workflow, and business practices. Let's take a bit more extreme scenario than that. Scenario 3, let's say that one of your expensive machines broke down. Use this to fabricate one of many components within your product, and not having it online caused you a bit of an issue. Without this component, your assembly line is essentially stuck. So through a simple workflow, visual workflow designer, you can quickly reroute raw materials from vendor A to vendor B, and then vendor B can fabricate the component and drop ship it to you for expedited assembly. This entire process of ordering, multi-vendor coordination, real-time granularity, and rapid drop ship is all managed through 1SCM's supplier collaboration console. 1SCM can eliminate a good portion of your manual processes and automate them for time savings, increased accuracy, and deep visibility. Again, you can just plug in the tool blocks you need, connect your ERP through a broad set of integration options, and rapidly improve the supply chain resiliency. If you're not already familiar with Take Supply Chain, our team down here in Austin has been innovating data collection and collaboration solutions for about the past 2 decades. We offer a wide variety of deployment scenarios, including cloud, which is one of Simon's value-add topics, for rapid turnaround with minimal IT demand and broad-range ERP support. One of our goals that I found is to develop solutions that can be realistically implemented today, but with rapid ROI without painful resource strain. I'd like to thank Simon for sharing IDC's manufacturing insights around supply chain trends in 2014, particularly around the influence of resilient and flexible supply chains that can rapidly respond to operational changes. It's a mouthful. I personally hope that you can see the value in OneSCM as a solution to meet your current and future needs for spin, visibility, and operational resiliency between you and your trading partners. If there's anything that Simon or I have brought up today that hits a pain point within your company, please don't hesitate to reach out to us at Take Supply Chain. We're more than happy to help you identify potential risks and scope potential solutions. I'm sure Simon would agree that this is always better to do at a minimum in advance to be well educated about solutions before disruptions actually occur and hit your lines. Don and I can be reached at the email addresses shown. Simon's contact information was also at the start of the presentation. Again, we hope you gained some actionable takeaways from this presentation and hope you'll join us for future events.